All right, welcome to The Explainer. We're diving straight into something that's got the entire financial world talking. A pretty wild forecast from JP Morgan. We're talking about gold and a price target that's, well, almost hard to believe. So, let's just cut to the chase. This is the big question, right? Could gold really break $4,000 an ounce? I mean, that's a huge number. It feels pretty bold. So let's dig in and see exactly how they get there. And just to give you some context for all this excitement, you've got to look at what's already happened. Gold has already shot up a staggering 30% just this year. Yeah, this isn't some slow, sleepy climb. It's a massive surge that's basically smashed through what most people were expecting. So are we in a new gold rush? I mean, what's really going on behind this incredible surge? We've seen gold blow past one record high after another, and it seems to be fueled by this potent mix of shaky markets and global tensions. Let's figure out what's really driving it. Now, according to JP Morgan's crystal ball, things could hit a real fever pitch around April of 2025. They're seeing a potential peak of $3,500 an ounce. And what's driving that? Well, it's their take on things like unpredictable U.S. trade policy and just general market jitters. Basically, all the stuff that pushes investors to run for the classic safety of gold. And look, you don't have to take my word for it. Here it is, straight from Natasha Kanova at JP Morgan. The answer is a straight-up yes. They're not just crossing their fingers here, they are, and I'm quoting, deeply convinced that the whole case for owning gold is stronger than ever. So naturally, they've bumped up their price targets. So why is gold shining so bright right now? That conviction, that deeply convinced part, it all comes down to what the research is calling a structural shift. And what that really means is that the why, the fundamental reasons people and big institutions are buying gold, is actually changing. And this shift, it's the foundation for this whole bullish forecast. And this slide just lays it out perfectly. Traditionally, for decades, gold's price moved mostly because of things like a weaker US dollar or lower interest rates. And hey, those things still matter, for sure. But the new drivers, the ones with all the power right now, geopolitical uncertainty, unpredictable trade policy, gold has leveled up. It's not just a financial hedge anymore, it's become a geopolitical hedge. And that brings us to this key idea, the debasement hedge. It sounds complicated, but it's not. All it really means is people are using gold as protection against the risk that the money in their pocket, their currency, loses its buying power, whether that's because of inflation or just funky policy decisions. Basically, when faith in paper money gets a little shaky, gold is seen as that reliable, tangible store of value. Okay, so who are the big buyers? This is really the crux of it. Who on earth is buying so much gold at these record high prices? Well, the demand is really coming from two major forces, two very powerful and pretty different groups. And if you want to understand the forecast, you've got to understand who they are. And here they are, the two main groups driving all this demand. On one hand, you have the central banks. We're talking the official sector. And on the other hand, you have private investors, which is, a huge group, everything from regular folks to massive investment funds. All right, let's break these two down. First, let's talk about the central banks. Because these guys, these institutions, have been on an absolutely historic gold buying spree. And it's a massive piece of this puzzle. Just look at the numbers here. The scale is just wow. For the last 3 years, central banks have been gobbling up over 1,000 tons of gold every single year. And get this, even with prices this high, JP Morgan thinks they're going to buy another 900 tons in 2025. So yeah, this trend is definitely not hitting the brakes. So why? Why are they buying up so much? In one word, diversification. A lot of countries are trying to lean less heavily on the US dollar. And this table, this really shows you the potential here. Look, the US, Germany, France, Italy, they hold over 70% of their reserves in gold. But the rest of the world, on average, it's only around 11%. That is a huge gap. There's a ton of room for other countries to play catch up. And this quote from Gregory Shearer at JP Morgan really just hits the nail on the head. He says they aren't done with gold yet, and that all the political uncertainty is probably going to keep stoking this fire in 2025. It suggests this central bank buying trend, yeah, it's got legs. Okay, so that's the central banks. Now let's switch gears and look at that second major group, private investors. Because while the central banks get all the headlines, private investors have been quietly stacking up a massive amount of gold for themselves. And just to give you a sense of the scale we're talking about, how does $5 trillion sound? That's the total estimated value of gold held by private investors. $5 trillion. That is a mind-boggling amount of private money looking for a safe place to hide in the yellow metal. And what's really interesting is how they're holding it. This chart shows that the vast majority, like 92%, is in actual physical bars and coins. People want to hold it. It's not just a number on a screen. But that smaller slice, the 8% in things like ETFs and futures, that part is growing like crazy, with money just pouring into those products this year. So why are these private investors buying? Well, their reasons probably sound pretty familiar by now. They're worried about the economy, they're hearing words like stagflation, that ugly mix of high inflation and no growth, and they're turning to gold because it's always been that proven safe haven. And above all, they're trying to protect themselves from policy uncertainty. You can literally see the sentiment in the numbers, a huge 310-ton inflow into gold ETFs just this year. So you've got this powerful 1-2 punch of demand coming from both central banks and private investors. So now let's get to the main event, the $4,000 price forecast. Let's look at JP Morgan's official outlook. Okay, here's the roadmap they've laid out. They see a peak around $3,500 in April of 2025. Then, for the rest of that year, they're forecasting an average price of $3,675. And from there, the momentum just keeps building, with the price climbing up and getting closer and closer to that headline-grabbing $4,000 mark sometime in mid-2026. So what's the big takeaway here? Why does all this matter? Well, this final quote from Gregory Shearer really says it all. In the world we're living in, with this really unique and messy cocktail of risks, we're talking stagflation, recession, currency issues, policy uncertainty, gold is standing out as one of the best hedges you can have. Its rally isn't just about the metal itself, it's a symptom of all these deeper anxieties in the market. And that really brings us to the final big picture thought. You know, a $4,000 gold price sounds great if you're an investor, right? But the why behind it, the reasons for that price, that's what's truly important. So the real question I want to leave you with is this. What does a forecast like this for an asset like gold really signal about where our global economy is headed?